Hello and welcome to BQ Prime. A very good morning to all the viewers. I'm Hiral Datia. One company that is in focus is a Maruti Suzuki, and this is on the back of the plans to increase prices from Jan 2024. Joining us on the show to discuss more is Shashank Srivastava. Shashank, good morning and welcome to the show.
Morning. Thank you. Good morning.
Shashank, if you could help us understand what has led to the plan with regards to increasing the prices from Jan.
Yeah, so yesterday, in the stock exchange, we informed that we'll be increasing the prices from January. This will be across all our models. And it's largely basis two reasons: the general inflationary pressure and the adverse movement of certain commodity prices, specifically steel. And that's the reason why we have concluded that we should increase the prices in January. We have not taken it to an immediate increase because obviously there are consumers who are waiting for a delivery of some of their vehicles. So we obviously give an opportunity to consumers for some time to take the vehicles at the older price. And that is why we have announced that we'll do it from January.
Right. So, Shashank, we'll get into the details, but what is the quantum on an average that you're looking at? Any range that you could give us? Because April, 0.8% was taken. The Jan before that, a little over 1% is the hike that was taken. So, in cumulative, if you go to see in the calendar year itself, we've seen around a 2% on an average kind of a price hike. What do you think will it be in 24?
Yeah, so difficult for me to give the exact quantum. We are still working out those details. Remember, the different models are affected differently. Basis each of them have their own levels of cost structure and localization. Although on an average basis, I would say since 70 to 75 to 77% of the total cost structure is actually material cost. It will really depend on which model, how much is the localization levels, etc. And therefore, it's difficult for me to give an exact increase, but it's going to be substantial in some of the models, I'm sure.
Okay, so as you mentioned about the material cost, if I was looking at the second quarter of FY24, around 73 to 74% of the sales is the material cost. However, on a year-on-year basis, that was down 300 basis points. So with that number, how does that fit in? Because I'm not able to understand the math there with regards to price increases. Because if you talk about Brent crude prices, 6 to 7% decline is what we've seen on a YTD basis as well. So where is the pressure apart from steel coming in? Because steel coils, non-ferrous castings, paints, these are a few of the key raw materials that we look at.
Yeah, so if you look at, for example, the HR steel prices, if you see July, the price is around $693, $695 in August, $701 in September, $708 in October. So there is a clear upward trend. So also, if you look at CR steel, the cold rolled one, it was 64 rupee 58 pesos in June. In July, similar level, but in July onwards, on the increasing trend, 65 rupee 8 paisa in August, 66 rupee 70 paisa in September, that is now close to 68. So there also the trend is on the rise. Remember, steel is actually almost 35 to 40% of the total commodity buying that an auto OEM does. So obviously that has a much larger effect. And when you talk about compare it with the past, let me tell you, the last 2-3 years have been actually very adverse as far as commodities is concerned. In fact, if you compare with prices even today at a slightly lower level, with 3 years back, the prices of commodities are very high. I'll give you an example of steel, which was at 38 rupees. I just told you it's 68 plus now. So that's still after the reduction. It had gone up to 84. So it has, when you compare it with 84, it looks like a reduction. But when you compare it with a 3-year back, then it is like almost double. Same is with copper. Copper was $5,200, went up to about 10,400. It's now about $8,400, $8,300. So it's gone up and then come down a little bit, but still very high compared with what it was earlier. But when we look at the immediate trend, then it looks as if, it has come down, and that's the figure that you were quoting.
But so, Shashank, this is the supply chain related pricing that we're talking about. Operationally, do you see any increases that have happened?
Yeah, so there are other costs, but as I said, the major cost structure for any auto OEM is the material cost. There are other costs. For example, our advertising or 1.5, 1.6% of the total cost structure. There you see inflation's upward of 11, 12% in the media inflation itself. So there are those smaller elements where you see other elements too. You can go to each of them actually. Everywhere you see the general inflationary pressure, and obviously that's going to add up, but the larger part, which on the material cost, is the steel, as I just mentioned.
Right. Now, with this, Shashank, the other question I have is, we're looking at a price hike at a time when the industry is talking about high inventory levels in the passenger vehicle segment. I think in the passenger vehicle segment in the month of October, the data that was released by FADA indicated that the inventory levels were almost at 60, 63 days versus the 30, 35 days on an average. And that was because of a slightly muted October, right? And everyone was expecting the sales to come in the month of November, taking Diwali and some of the festivities that shifted to the month of November. How is that picture looking like? Have the inventory levels come down, or do they remain at elevated levels right now?
Yeah, so let me give you the exact numbers, because much of what has been discussed generally in the media seem to be on an average basis, a general talk. The actual inventory levels estimated at the 1st of November is 335,000 for the industry. Retails are roughly similar levels, so that's actually a 30-day inventory. Now, there are some models where the inventory levels is more than 30 days. It could be 45 to 60 days. But that's not the average level. The average level is 30. Some models have 45 to 60 days inventory. And I think what was extrapolated for those specific models was generally spoken about for all the models. So the inventory level is about 30 and still elevated. And the reason why they were elevated towards end of October was because there was in anticipation of the festive sale, which was from 1st to 15th of November. Remember, Diwali, Bhai Dooj, Dhanteras, all fell in that period. It was considered to be a good inventory to have. You need to have inventory to be able to deliver, and vehicles were delivered in this period. There was very good sale. However, there is also a wholesale added for November month, and that has pushed back the inventory back to that 335,000 range. I would expect 1st of December stocks to be in the industry to be at the same level as they were on 1st of November. But there is a difference between 1st November stock and 1st December stock. And the difference is there is no festive season coming up after 1st of December. Although there are many marriages, it impacts a little bit on some parts of the country. And second, generally speaking, December is a month where people would like to keep the inventory levels down, because nobody wants to carry the model year 23 into the new year of 24. That's also the general trend, both from consumer side as well as the channel side. And therefore, my expectation is that in December, you will see a much lower wholesale number from the OEMs, and a large push for retails to reduce the stock by the end of December. And that large retail push means that you will see elevated levels of promotion costs or discounts or thing, depending on which model the stock levels are high.
So doesn't that really put us in a situation where we are talking about liquidating inventory with discounts, offers, etc., and in turn looking at a price hike for the month of January? How will that, will that be able to match? Because in fact, I was just reading where FADA is also asking retailers and in fact asking financiers to stop overfunding auto dealers, with regards to maintaining or reducing high inventory, or the ones who have a high inventory to stop financing them. How does this impact the industry from an OEM perspective then?
Yeah, so I think generally speaking, our recommended inventory levels for Maruti Suzuki, for example, is 3 weeks plus transit time. So transit time on an average is about 5 to 6 days from Gurgaon to different parts of the country. But of course, for dealers closer to the factories, obviously it is a little less. So it's 3 weeks plus the transit time, and that is the inventory levels which is recommended. The inventory level keeps fluctuating. depending on production levels and depending on the market situation. So there are still some models which have got waiting period even today. So it's not as if all models are affected the same way. So when FADA says that 30 days a bank should not fund, I find it a little strange, because it's for the banks to decide to fund, and for the dealers to decide whether you want that extra funding or not. So dealers can decide not to increase the stock beyond 30 days. I mean, you don't have to let banks decide that. And different dealers will have different capacity for stock, and also a different forward-looking estimations. So some people, for example, end of October did not carry high stocks because they were saying is bar season acha nahi hoga. But there were some dealers who took a higher stock because they bet that the season would be good, and those are the dealers who actually succeeded. I think it's a business decision what levels of stock dealers have to carry, not necessarily the bank's decision, because you can't really look at it purely from a financial viewpoint. You also have to look at it from a market viewpoint.
So Shashank, as you also mentioned that, the inventory levels which people have taken on an average, some segments have had it really high, some segments it wasn't. The trend
Correct.
that the dealer checks indicated to me were that the SUV segment was where the inventory levels were not that high. It was mainly the mini compact, the smaller variants where the inventory levels were higher. And if that is the trend, what are the kind of discounts that the company and the industry is preparing for to liquidate this stock?
Yeah, so it's a great point, because it's true generally that some of the models, not necessarily SUV, although there are some SUVs where stock levels is also high, but generally speaking, it is the smaller hatches which have seen this problem. And remember, it's got nothing to do with overall sales volume. So sales volume and discount is actually a function of the difference between supply and demand. So it's not just pure demand. For example, the top three models in the industry are small cars. The Baleno, the Swift, they are small cars, and they are the ones which have actually be the top selling models. But the problem has been that because of the semiconductor component issue, we have seen larger number of production of these smaller hatches, coupled with, of course, lower demand than the previous years. And that has led to higher stock levels in these models. So obviously, since discounts are a function of inventory levels, you would see a higher level of discount. That's what you have seen in the past. But from here onwards, after July, when we see semiconductor issue sort of fading into the background, we have been able to make vehicles as per the actually underlying market demand. And that means a correction of supply of these smaller cars. So I would expect going forward that correction to happen, not necessarily that the discount for these models will go up.
Right. So very lastly, with all of this said and done, in terms of FY24 as a year, would you be still looking at what we've seen in the past couple of years in terms of CAGR growth, or do you see some shifts happening?
You mean to say the financial year 24-25?
Yes. No,
Yeah,
24 itself, in terms of the current year.
Yeah, so current year looks like a 41.3 lakh type of sale for the current financial year. That would be roughly like a 6.5-7% type of growth over the previous year. But on this very high base level, 24-25 would probably be muted. We are still working out the details to take a position on what would the next year be. But personally speaking, I would expect it to be muted from the high levels that of volumes that we are seeing in current year.
So we might not be able to hit that double-digit 10, 11, 12 kind of a number.
Yes, it looks like, but we are, as I said, still in the process of doing that detailing. And
Correct.
Once we are complete with it, definitely in a few days, we'll be able to inform everybody.
Absolutely. Right. All right, Shashank. Thank you so much for speaking to us at BQ Prime and for that candid conversation, because a lot of insights that we pick up from an industry perspective as well as to what's happening, what's brewing around. Thank you. Stay safe and speak to you soon again. So that's the management with regards to Maruti, clearly indicating with regards to the price hikes that we should be watching out for and the trend that we have been witnessing in the passenger vehicle segment. That's all that we have on this segment. Thanks for watching, and lots more lined up on the other side. Please stay tuned to BQ Prime.